SoFi stock could trade in between $6 and $8, creating a new bottom. That is what Investor Place had to say today about SoFi stock. So if you guys have a large position in SoFi, just like I do, make sure to give that a gander and go look for yourselves. Link down below in the description for that article. Nonetheless, I am surprised that SoFi stock was up 2% today. Why do I say that? The NASDAQ was up 2%. All indexes were up over 1%. Russell 2000 up about 2%. Well, I'm surprised because JP Morgan had their earnings today, and Jamie Dimon, the CEO of JP Morgan, had some very bearish things to say on the American economy for the rest of 2022, and SoFi should have been on the chopping block to have its share price reduce quite dramatically based off of what was said. Virtually all banks today were red. JP Morgan down over 3.5%. So that's very important. We need to get into. It does look like SoFi stock has found a bottom, and I think it's pretty safe to say that here at this point, even considering what we've seen today in the banking sector. Now, on top of that, we do need to go over the catalyst for tomorrow. We have a lot more bank earnings, and things could get a little bit bullish or a little bit dicey here in the markets in the short-term future, as well as that the option activity on SoFi stock is eerily bullish. You're not really seeing any bearish activity actually coming through from institutional investors here and now. So we got a lot to get into: the technical analysis, the short interest, all of that. Stay tuned. We're going to make this money. In the meantime, hit the like button, subscribe to the channel, get this channel to 1,000 subscribers. Thank you guys for tuning in and watching all of these videos. This is honestly my favorite thing in the world to do, and I hope I will be able to continue to make these videos and provide you guys the insight that hopefully will make you guys money. Now, without any further ado, let's dive into it. All right, guys, first and foremost, what happened with JP Morgan earnings and why is that so important concerning SoFi stock? Now, they kind of do the same things, right? Banks, SoFi, they give loans, they refinance, they do a lot like that. Obviously, there's differences here, but the markets are really essentially saying that SoFi stock is going to have a really bad year, a really bad couple of years. And you can tell that by how much the stock has gotten shorted into the ground. Well, depending on what JP Morgan, these other banks have to say about the economy, really is going to feed into how the markets are going to feel about other fintechs like SoFi. That's why one executive leaves PayPal, and PayPal drops 5% in a day after they've already been beaten into the ground well under their fair valuation. Hopefully, in a nutshell, that makes some sense to you guys. But here's this article. Jamie Dimon sees storm clouds ahead for U.S. economy later this year. Now, what exactly did he say? Well, he says the risk that the Federal Reserve accidentally tips the U.S. economy into a recession as it combats inflation is rising, according to JP Morgan Chase CEO Jamie Dimon. Quote, "I'm simply pointing out that those are storm clouds on the horizon that may disappear. They may not," Dimon said. In the event that a recession does develop, the bank would have to put up a lot more money for loan loss reserves, Dimon told reporters. And that's exactly what happened. The bank took a $902 million charge for a building loan loss reserves, a stark reversal from a year ago when it released $5.2 billion in reserves. And that was a lot of the Fed's actions, right? Making banks keep a certain amount of liquidity in case defaults started to roll in. That did not happen. So the Fed said, hey, you guys don't need to keep all this money anymore. We have a very low default rate among corporations as well as among average citizens. It's unnecessary to keep multi-billion-dollar reserves just sitting there basically doing nothing. But now, for the first time since about a year ago, they are now adding to that default reserve, and that's basically money that gets set aside in case loans start to get defaulted on, so the bank essentially doesn't go under, so you don't have an 08-09 situation again. And that's a really, really negative sign that JP Morgan is now putting up almost $1 billion for this essentially an emergency fund, right? And also, JP Morgan posted a 42% profit decline from a year earlier on increased costs for bad loans and market upheaval caused by the Ukraine war. So it's not all too great what happened with JP Morgan today. The statements, the numbers, not looking so good. And that should have directly rubbed off on SoFi stock. And I'm not saying this to be like the guy that wants the stock to go down. It's quite the opposite. I think that SoFi stock, the fact it actually had a positive day today, really shows a lot about how far the stock has dropped, and the fact that it's probably not likely to drop more than that unless they really do miss some kind of guidance expectation that they have set for the markets. But SoFi, they just lowered guidance. So I think it's going to be very, very improbable that they don't at least meet that guidance once they do report their earnings here. And they're probably going to well outperform their guidance. There's a term called sandbagging in the investment world. If you guys have not heard about that, that is essentially where a company will set super low expectations, give really low guidance. So their stock price obviously takes a hit, but then on the next earnings report or down the line, it's a lot easier to beat that previous guidance because you basically threw the markets the worst case scenario, and 9 times out of 10 when companies do that, they do end up beating next quarter's guidance. So it does look like SoFi may have done that with the guidance revision to the downside, and the fact that the CEOs as well as a lot of insiders have been buying a lot of stock is definitely another reason to be saying that. In my personal opinion, you guys see all of the buys that happen with SoFi. Last time you had those kind of buys, the stock ran from about 15 all the way up to about $23, $24 per share. But that is neither here or there. I am very, very enlightened, surprised, whatever word you want to put it, that SoFi was positive today. And I believe earlier in the day as well, we did hit another new low, and then we totally reversed. Yeah, you guys can see right here a new low, $7.24 per share. We hit that earlier in the day. Let's go ahead and pull that up. That was in the first call it 5-10 minutes of trading. We hit that low, instantly bounced back up. It wasn't a huge moving day for SoFi, though. We really had a lack of volume for a lot of the day, and the stock really kind of just melted up. It kind of just continuously went up, besides brief periods when the market was feeling a little bit of that instability. You did see some drops down, but SoFi held a lot of strength throughout the day since after we did hit that all-time low. So I think that's a very, very, very positive thing, and that you guys should definitely keep that in mind. Now, as far as what we are setting up for tomorrow, it's gonna get pretty damn interesting in the stock market, especially in the banking sector, which obviously SoFi is in, or even the fintech sector, because we have TSMC, which is Taiwan Semiconductors, that reports tomorrow morning. But most importantly, Wells Fargo, Goldman Sachs, Citi, Morgan Stanley, PNC, Ally Bank. You have 6 banks, the largest banks, that report earnings tomorrow morning. So if they give a more bearish outlook on the economy, I don't think there's going to be necessarily a positive reaction in the banking sector. Now, if it plays out like JP Morgan's earnings played out, you actually might see fintechs outperform quite a bit. Maybe the markets start to look at fintechs as like an alternative, more or less, to the big banks. Maybe they will kind of see, hey, SoFi, Square, PayPal, they might do a little bit better than the legacy banks, this time around. So we'll see what happens with that, but it's going to be very, very volatile for SoFi stock and for the broad markets because of these earnings. But overall, before we dive into anything else, I just want to say, SoFi stock hit that all-time low today, and I felt comfortable buying the stock in the 15s. I felt like that was a good price, right? So now that the stock is 50% cheaper, there's no reason for me personally, or really any of you guys, not financial advice, to be worried and scared about your SoFi position. The lower it goes, the better likelihood you'll probably see a buyout. It becomes more reasonable, and that's kind of something you could kind of look forward to if the worst case scenario happens. If SoFi needs to get bought out, you're probably going to make all of your money back and profits during a buyout if that does happen. If not, I think this is a 10x stock in the next 3 to 5 years, and that's exactly the way that I look at it, and that's what I invest for. I'm not buying and selling. I've never sold a share of SoFi, and I honestly don't plan on it. Now, let's talk about what happened today with the or text data, and you could see the short interest continues to climb, now at 19.86%. Shares that are sold short, 143.07 million. Cost of bar max of 3.94%. And just for today, you had 13.54 million borrowed shares that were sold short. Now, what was the volume looking like for today? The volume was only 39 million. So obviously, when you have 13 million shares sold short in a day, when volume is not even 40 million, you would expect to see an adverse reaction off of that. Well, I do think you're just seeing a lot of stability from the options market, from all of the call activity that is being placed, as well as a lot of people that are done selling SoFi. I mean, at these prices, what's the point of selling out, right? If you didn't sell out in the $15 range, there was really no point to ever sell out. And like I said, even $15, that's around where my average is. So I'm not the guy to say that $15 is the top. I actually think it's quite the opposite, but nonetheless, you guys get the point there. The shorts continue to short the stock, and the sellers are really gone from the stock. You're not really seeing anybody that continues to sell the stock, and you could see this yellow line right here. Ever since we did go from about 15 all the way down to where we are right now, the short interest has really exploded through the roof, and that does signify to me, again, the possible sellers that owned SoFi stock are really gone at this point. It's just a lot of shorting activity that continues to push SoFi stock down. The utilization is at 100%, so that is obviously still a good sign. The days to cover is sitting at 3.08, so it will be hard for shorts to get out of their short positions when in fact they are forced to. Eventually they will be forced to, and you will have to buy back your stock. The question of when that'll happen, that's really up in the air. Let me know your guys' take on that. When do you think SoFi stock will actually reverse in a meaningful way, get back up to $15, $20 per share? Would love to hear your guys' thoughts on that one. But as far as the option activity, take a look at this. 2 orders totaling $106.54 thousand, positive order value of 100%. Even over the past week, you've seen 89 orders totaling $20.19 million, positive order value of 68%. One order came in today, October 21st, 7:50 call, June 17th, 7:50 call. These orders came in yesterday, a January 2024 $2.50 call, April 22nd call, the $8 strike. That was for about $42,000. The 2024 option was for about $285,000, and then another January 19th, 2024 $10 call that came in yesterday for about $118,000. So the options market is definitely looking very bullish for SoFi stock, and I think that does show a lot here that you're probably at that bottom. If I were to imagine, I don't think SoFi stock's going to go much lower than this. If shit gets bad, if the markets go through a panic, the markets crash, you could drop as low as 5, but I really think it's highly unlikely when the business is performing as well as they are performing. If the business was sucking, this would be a totally different conversation. Now, that's basically that. As far as really economic data for tomorrow as well, core retail sales, that's going to be important. That's going to give us a glimpse into the consumer. How strong are they? Are they still spending money? What's going on? I think that goes without saying. Core retail sales will be very, very important as far as trying to predict when a recession will come. You need to have a strong retail sales number to really get that continued optimism. And if we do, you're going to see stocks like SoFi that go absolutely crazy tomorrow. If it's bad, the market's going to take a leg down. That's almost a guaranteed fact. Initial jobless claims also comes out tomorrow. I don't expect that to be anything too crazy. The markets really don't move too much off of that. The other big catalysts are going to be Michigan consumer sentiment, Michigan consumer expectations, and the Michigan 5-year inflation expectations. This is not only important because I'm from Michigan, right? It's important because the markets react to it. Because in a way, what the consumer expects is usually what the consumer gets. If the consumer expects a lot of inflation, then companies have a lot easier time raising prices and not really getting backlash from the consumers because they expected it. So you get what you expect, right? I know you guys have heard that a million and one times. So that's why it's so important to the markets, and the markets do react to that, to that, and that comes out at 10 a.m. And the other data points, like I said, the core retail sales and continuing jobless claims, as well as initial jobless claims, come out at 8:30 in the morning. So that's going to be your pre-market, and you're definitely going to see a move based off of that to wake up to tomorrow. So that is basically it. We'll go ahead and look at the max pain for tomorrow. I don't think it does us too good right now. You know, it really comes down to what the data catalyst do tell us, but that is looking like $9 per share by tomorrow. So that would be a welcome sign. That would be a $1.50 move from here. That would be like a 15% day. We would definitely take that. So just food for thought right there. Keep that in mind. As far as the technical picture here, you're really going to see, like I said, a lot of support at $5 per share if for whatever reason we do have a lot of negative sentiment that does start to take over. Now, that's not looking very likely, but I'll go ahead and mark this so we can stay up to date with the chart here. I think odds are that we do start to come back up to about this 13-day moving average. We tend to stay around the 13-day moving average. Whether you go up or down, it tends to retract back to that moving average. And that's exactly what I expect to happen if we do have good bank earnings tomorrow, and if retail sales data is also good. So that is pretty much going to be all for this video. Not really too much else to add besides let's fucking go, baby. I think it's a great time to go shopping for some SoFi stock. Thank you guys for watching. Like, subscribe, do what you guys got to do in that regard. I will see you in the next one.